Hi everyone, welcome to Leisrealtalk. Good to have you. Sorry I didn't do a program yesterday. I had to go with a family member to a hospital for a medical procedure, so I wasn't able to come back in time to prepare for the program. So I'm doing it tonight. There was a comment, someone asking Sumiland if I don't know if it's a he or a she, but thank you so much, Sumilan, for helping me, uh, reminding people. So you're really playing the role of an assistant. Thank you. All right. So tonight we will talk about, really the topic. What's really behind the collapse of, few banks, the Silicon Valley Bank, now Credit Suisse, and also Blackstone. We talked about Blackstone last Saturday or the Saturday before this past one, but they're all related from my perspective. So I want to talk about that. And I think it's it is going to be a speculative analysis, but I think it's a perspective that needs to be heard. And I hope that people who have the means and the resources do more follow-up and research um, after I present my ideas. So yeah, so after the Silicon Valley Bank collapse, we saw another one, right? Today we heard Credit Suisse, the second largest bank in Switzerland, is in a meltdown mode. Sorry, let me turn this off. And the talk of Credit Suisse collapse has been ongoing since last year, and it's now becoming reality. The financial sector is in crisis. Bad investment decisions, management oversight, inflation, a cooling economy, the pandemic. I mean, these are all the many, and then there are many other technical explanations of the reasons of these financial institutions' failure. I think they're all valid, but there's one aspect that our media has not talked about. And I did a program on March 4th to talk about the Blackstone's financial troubles. And I'm kind of expanding that idea or that perspective into other failing financial institutions to really see the role that Chinese money and Chinese politics have played in this crisis. So, what do these two banks have in common with Blackstone? Um, they all have a strong China focus and a close tie to the CCP, and they manage the money for the movers and shakers of China. It might be precisely the Chinese money and Chinese politics that got these banks into trouble. There are people out there who claim that the financial crisis is part of CCP's financial warfare against the US and the West as part of its unrestricted warfare or unrestricted warfare strategy. I don't hold that view because I think such an attack would be suicidal for Beijing. And also, it's detrimental to the crippling Chinese economy. I do not think Xi Jinping would want to do that now. But the way geopolitics and Sino-US relations are heading definitely come with a question. What are the prices that both sides will pay in the event of a financial decoupling? Please stay until the end when I address that. I think the impact is unavoidable. Hopefully, by sharing some perspective or some insights, maybe what we can do is stay ahead of the curve to minimize our losses. But I think the impact is unavoidable. So we'll talk about first the impact of Chinese money and Chinese politics on the financial sector, or specifically, what do Blackstone, Silicon Valley Bank, and Credit Suisse have in common in their ongoing troubles? And the second question is the financial impact of China's decoupling from the world. That's more of a discussion. For a China observer like myself, I see a common theme weaving throughout the financial crisis that we've seen in the past couple of weeks, involving Blackstone, Silicon Valley Bank, and Credit Suisse. When I say that, I meant Chinese politics and money. So from my perspective, there are three similarities in these three cases. I'll go over them one by one. First is they're all involved in the business of serving institutions and high net worth individuals financially. And they're in the business of serving people with a lot of money. And these sectors are what Xi Jinping is focusing on for his anti-corruption effort. Blackstone is a top private equity firm. Silicon Valley serves venture capital industry, and Credit Suisse is a leading brand for private wealth management. If you know China, you know that these are precisely the target of Xi Jinping's anti-corruption campaign. About a month ago, on February 17th, a well-connected Chinese dealmaker, Bao Fan, was detained by CCP's Central Committee for Discipline Inspection for investigation. I think I have a picture of him. Here we go. Oh, not him. Sorry, this guy. World media widely covered it. And on the same day, shares of his company, China Renaissance, plummeted, falling 50% at one point in early trading before the decline converged to 28% by the close of the day. So who is this guy? Who is Bao Fan? He's known as the king of mergers and acquisitions. He's as influential as the other Chinese finance heavyweight, Sequoia China's Neo Shen. I think you probably know this guy more than Bao Fan. So Neo is considered the king of private equity in China. And do I have a picture? Yeah, and he's also, there's a video on YouTube where him held a 40-minute discussion with Steven Schwarzman at the beginning in April 2020, at the beginning of the pandemic, talking about the outlook of the world's economy. And it's interesting. There are not a lot of videos like that being released on YouTube, but this one, I don't know. I think it's a Chinese person released that. So yeah, and so this guy and then this guy. Let me first talk about this Bao Fan guy. He is, according to his own estimate, he has had dealings with at least 70% of the Chinese internet companies. And people say that his company has contracted 90% of the apps in Chinese people's cell phones. 1 year after Xi Jinping cracked down on the Chinese tech industry, both of these two Chinese guys, these finance heavyweights, fell from their stardom. And their problem is, with the wealthy Chinese men like them, the problem is they're considered to be the white gloves or the bagmen for the CCP high-ranking officials, because CCP officials technically don't own much assets, or they're not allowed to own much assets. They'll be in trouble. It will be found out. So they rely on these business people, or they help these business people achieve stardom in business or become extremely successful. But part of their success is really the wealth that they hold for these government officials. So these people, so through them, Xi Jinping can find out, who really are the real owners of these companies, of these assets. But both men have fallen from their stardom recently. So if you look at the two articles about Neo Shen, he is gently switching from high tech, which isn't Xi Jinping's favorite industry, to, big tech, like Alibaba, and Tencent, and all of those big tech social media companies. So he's gently switching that, staying away from those, and becoming more interested in industries that Xi Jinping is interested in, like semiconductors, robotics, artificial intelligence. So these are interesting articles that you can read. And this guy was the only delegate representing the private equity industry at the Chinese People's Political Consultative Conference, but he was not invited this year at the two sessions. So the reason I'm showing you these or telling you these is um, Baofan's disappearance and Niu Shen's fall from stardom both signal the beginning of a new wave of crackdown on financial sectors, particularly in private equity and probably venture capital as well, because these are the industries controlled by the Chinese princelings. So behind these industries, there's a massive amount of hidden wealth that belong to the Chinese CCP families. And that's what Xi Jinping is interested in. And that's his top priority in cracking down, because he needs the money. He's running out of money. So he's after the CCP officials' hidden wealth overseas by focusing on private equity. And wealth management is always an area where he focuses on. But lately, people say that it is private equity that he's interested in. So if you look at the three companies, they all fall into that category, right? Blackstone is the leader in private equity. Silicon Valley Bank is in venture capital, and particularly in high tech. And then Credit Suisse is in private wealth management. So the first commonality is the sector they're in, and that they match with Xi Jinping's target for crackdown. And the second commonality is all three companies have had a strong connections to the CCP. And not necessarily to the CCP in general, but had a strong connection to the faction that was in power before Xi Jinping. So it was to the Jiang Zemin faction. And also that's an area where Xi Jinping is always wants to investigate. So I discussed Blackstone and its founder, Steven Schwarzman's strong connection to China in my March 4th program. So I won't repeat it here. You can watch it. If anything, Credit Suisse has a more notorious reputation for being very pro-CCP. In 2018, Credit Suisse was fined $77 million by the U.S. Justice Department for its princeling hiring practices. So according to SEC, in 7 years, Credit Suisse hired more than 100 employees at the request of foreign officials. And these employees are the family members or friends of high-ranking officials in foreign government. I think here you could assume the bulk of them are Chinese officials. And another scandal is during the pandemic. Yeah, here's the media report. And during the pandemic, in the spring of 2021, while Credit Suisse was accelerating its footprint in China, it closed the account belonging to the Chinese dissident artist Ai Weiwei on the grounds that the artist had a criminal record in China. Here's the media article. And Ai Weiwei denied it. He denied of having a criminal record in China. And he brought the matter in September, a few months later, to the public. And he criticized Credit Suisse for protecting accounts for senior CCP officials while treating political dissidents as criminals. And 2 months later, Credit Suisse changed its position and stated that the reason why it decided to close Ai's account was because of missing paperwork. Now, at the time, Ai Weiwei was not living in China. He had left China and was living in Portugal. So this is outrageous. I mean, why would it close the account of someone who lives in Europe in its neighborhood for a crime that he didn't commit in a foreign land, only because some of your customers probably request the bank to do that? That just shows you how much influence the CCP has on Credit Suisse. Now let's talk about Valley Bank. Since Silicon Valley Bank, SVB, started to be involved in the Chinese market. The bank started to be involved in China as early as 1999, and that's what the bank's website stated. In 2012, the bank was given the approval by Beijing authorities to establish a joint venture bank with the Shanghai Pudong Development Bank, which is a commercial bank listed on the Shanghai Stock Exchange. And this bank is also closely tied to Jiang Zemin's son, because the China Mobile, a company controlled by the Jiang family, is the third largest shareholder of this bank that SVB was creating a joint venture with. So this joint bank was the first joint venture bank approved by Beijing in 15 years. It was rewarded to SVB for having played an important role in bringing Western capital to China. According to various Chinese media reports, in 2004, okay, that's 20 years ago, or 19 years ago, SVB called up their contacts in Wall Street and Silicon Valley to join them for a 6-day business study trip to China. And that summer, the bank brought either 25 or 24, because one report said 25, the other said 24, about 24 partners from top VC firms to visit China. And the firms are Sequoia Capital, KPCB, Accel Partners, NIA, Red Point Capital, DCM, and so on. And in the following year, Sequoia invited Neo Shen, the guy that I showed you previously, who was the founder of C-Trip at the time, to set up Sequoia China. And in the same year, which is 2005, the following year after the trip, SVB set up its first China subsidiary called SVB Venture Capital Management. Its second subsidiary, SVB Business Partners Beijing Company, opened in 2010. SVB had set up 4 subsidiaries in China, and 3 of them are still in existence. And these are, I think there are 2 consulting firms and 1 service companies, and they provide the Chinese with in-market support and advisory services, in regards to venture capital industry. They also play a key advisory role in working with other US clients as they want to expand into China. So one example of their success was on July 7th, 2011, when Meituan, a major Chinese online retailer, completed a 50 million Series B round of financing. And its founder showed off the balance in his Silicon Valley Bank account on his computer at the press conference. And the account showed that he had $61,922. I think I got excited when the amount is big. Sorry, $61,922,000 in his bank account. And by the way, Sequoia Capital owns 8.3% of that Chinese online retailer. So Chinese companies obtain funding in Wall Street through the VIE model, right? The VIE structure, variable interest entities. And SVB is the #1 bank for Chinese VIE companies. Chen Yawei, a senior lawyer in the field of venture capital, told a Chinese media called Deep Web. And this is what he said. He said, the clients I served are basically entrepreneurs who have taken dollar funds and need to build VIE structures. And Silicon Valley Bank is almost the only bank they chose throughout the process. And think about how many Chinese VIE companies out there. And that's probably how many Chinese clients SVB has. Someone told me that I don't know if it's true, I have not got the chance to verify it. Someone said that all the VIE Chinese companies use SVB as their bank, or at least use SVB amongst its list of banks. So that just tells you how many Chinese customers SVB has. And Chinese companies chose SVB because the bank knows how to work with the Chinese. They're fast in setting up accounts and have less compliance restriction. I don't know if that's good or not. And according to Liu Xiuping, Vice President of Finance of Innovation Works, also a Chinese company based in China, startups can open an account with SVB within a week, while it may take up to a few months with traditional banks. Now, another commonalities that fall into this category that they all have a close connection to China is that these three firms all entered the Chinese market at the same time, right? Blackstone in 2006, Silicon Valley Bank in 2005, and Credit Suisse opened its joint venture in 2008. And that was during the Jiang Zemin / Hu Jintao era. During Hu Jintao's 10-year as the CCP leader from 2003 to 2012, Jiang Zemin was the de facto ruler because he shadow banned Hu Jintao. So essentially, my point is these financial institutions build a connection with people in the Jiang Zemin faction. And these officials have been engaged in major capital flight with the help of these financial firms. And how much money have been moved out of China before Xi Jinping's anti-corruption campaign, or before Xi Jinping cracked down on the capital flight. On January 21st, 2014, the International Consortium of Investigative Journalists made a major announcement that, according to confidential documents it had obtained, nearly 22,000 investors from mainland China and Hong Kong had registered companies in offshore financial centers. And these people include many children and relatives of important CCP leaders. And the organization estimated that $4 trillion worth of money and shares in companies have been transferred out of China since the year 2000. And the organization also named Credit Suisse and UBS as having been implicated. So from 2000 to 2014, you have 4 trillion. And from 2014 to now, we have another 9 years. So although I think the bulk of the money that belonged to the Jiang Zemin faction or to a lot of the corrupt high-ranking officials have already moved their assets before the pandemic, probably before before the pandemic, before 2019, 2018. But I would still say that you can safely say the total amount of money that these individuals have moved outside China has grown from $4 trillion as of 2014 to between $6 to $8 trillion as of now. I don't have the exact number, but that's just my rough estimate based on the trend that I've seen. So that's the second commonality. And the third commonality is important because it's directly related to their current predicament. These financial institutes all experienced large cash outflows in recent months. In other words, large amount of customers withdrew their deposits or investments with these firms, and this has contributed to their financial crisis. In my March 4th video, I talked about Blackstone's private real estate investment trust is bleeding due to a large number of investors withdrawing since October. It actually started in July, and then the withdrawal became substantial again in October and did not stop for 5 months. And unlike mutual funds and bank deposits, which can be liquidated daily, real estate investment funds are for the long term. So monthly withdrawal, there's a cap on monthly withdrawals to prevent large liquidations. But Blackstone's REIT, or Real Estate Investment Trust, saw a total withdrawal request of more than $12 billion from October to February. And Blackstone only approved a portion of the withdrawal request, from 25%, 35% to 43%, and eventually lowered the withdrawal cap from 2% of the total assets in the portfolio to, I think, under 0.5% to prevent further liquidation requests. Credit Suisse big problem is also large cash outflows, and this bleeding started last year, about the same time when Blackstone saw its first major liquidation or withdrawal request in July. And I said in my program 2 weeks ago or a week and a half ago that it was the Beidaihe meeting time in July. And then the major withdrawal continued after the 20th Party Congress. So Credit Suisse cash outflow problem continued during that whole time that Blackstone experienced the request for a withdrawal. And media report said that during the last quarter of 2022, 110 billion Swiss francs, or about 118 billion US dollars, left the bank. And that's a massive amount of money. Similarly, we know a bank run was the trigger that crushed SVB. Although there are other factors that people say, such as interest rate hike, inflation, or the bank executives' poor judgment in risk management. But the real cause of the meltdown was large amounts of withdrawals and the liquidity crisis it caused. Media reports said that the SVB meltdown took place within 48 hours, but the actual cash flow also started months ago, and the timing mirrored the withdrawal, the cash outflows that we've seen in Blackstone and Credit Suisse. So I want to share with you a chart I found. Here it is. Let me make this, let me blow this up. I don't know if you can see. Yeah, here it is. This is in Chinese. The column heading represent the quarter ending date. So the first column on the far right is September 30th, 2021. So that's the third quarter, right? Ending third quarter of 2021. And then the next one is the fourth quarter of 2021. And then the column on the left is the last quarter of 2022. And take a look at the line in the middle that's circled in red. And that's the increase. That line, the Chinese said, it's the increase or decrease of deposits or restricted deposits. It's cash. It's a subcategory of cash, but the exact translation is cash inflow or outflow, or you could say cash increase or decrease to deposits or restricted deposits. And if you look at the numbers, third quarter of 2021 on the far right, and there's an increase. The numbers is in a Chinese unit measure, so they're not equivalent to billions. So you see 602.2, it's really 60.2 billion. Because the Chinese unit measure is 100 million. It's not billion. So you see there's an increase of cash due to increased deposits in the third quarter of 2021, and the amount is 60 billion, 60.2 billion. Moving across to the last quarter of 2021, you see 72.4, and that's 78.2 billion in the last quarter, right? In the last quarter of 2021. Then this number start to go down in the first quarter of 2022. And so it become to be negative. So it went from a positive cash inflow and to a negative, and it kept growing. You see that trend? So obviously the cash outflow, the bank run didn't start just like on March the 9th. It didn't happen within 48 hours, as media claim. This cash outflow has already started, and in the actually second quarter, in the second quarter of 2022, and it got worse during the third and fourth quarter of 2022. And that timing, like I said, matches with the same cash outflow of Blackstone. You can watch my video. I gave the numbers in that video. And the timing also perfectly matched with the timing of the Party Congress in fall. That's happened in October, right? From the Beidaihe meeting, where the CCP factions settled their final, went for their final round of power negotiation at the beach in July, till the time where the Party Congress was actually held in October. And that whole time is when we start to see growing amount of cash outflows start to take place. So, of course, it's speculative, because I'm only seeing the numbers, the results. We need to look into at a transaction level, right? What customers actually left these banks, and who owns these bank accounts. And probably have to drill down. You can't just look at the name, because they probably are some VIE companies or some shell companies that's located right in the United States, with address in the United States. But you need to really look at who owns these companies. So Blackstone, Credit Suisse, and SVB are all in the business of losing cash due to large withdrawals. And for Blackstone, we know 70% of the withdrawal requests came from Asia. And this was stated in media. And I think you can safely say 70% is Chinese, because the 70% did not include any withdrawals coming from the EU or the United States. Although I know that a lot of the money held by these Chinese princelings or the Chinese officials are already American assets. They're already American assets. So their withdrawal would not be reflected in the 70%, because they're considered, American assets. So you can safely say that 70% of the withdrawals came from China. Now, if 70% of withdrawal requests were the case for Blackstone, the question is, what percentage of the withdrawals in the months leading up to the financial meltdown for SVB and Credit Suisse came from the Chinese? We need to look at the same numbers. I don't have that numbers, but I think I'm interested in finding that numbers. And I think a lot of you might have the resources. Those of you who work in finance, in Wall Street, or in government, regulatory agencies should have access to these data. So what percentage come from the Chinese? And was that the precursor? Was that the condition that was created for these financial institutions before the general public became alerted and started to withdraw, and that caused a bank run? So I think the Chinese princelings and these money that Chinese government officials own have already withdrawn a significant amount of their money. And I think they started to withdraw the money, like I said, sometime last summer, and continued after the party Congress. Now, there are three types of money that have contributed to the massive, large withdrawals. They don't necessarily come from the same group of people. The first type is what I call the hidden wealth the CCP officials have outside China that the Xi Jinping regime has already discovered, and he's forcing them to liquidate and bring the money back to China, or else, who knows, right? He needs the money. And the second bucket is the hidden wealth the CCP officials and their families have outside China that Xi Jinping hasn't discovered. And these officials themselves and their bagmen or white gloves want to move them out of the United States or EU for fear of being discovered, or for fear of sanctions in the event of a war, or they just want to they just foresee maybe a financial crisis in the American market because they know what Xi Jinping is up to, and maybe they just want to move the money elsewhere. Excuse me. So that's the second group. And then the third group is private money held by wealthy Chinese who are concerned with the deteriorating Sino-US relations or even a war in Taiwan. Now, these people are not afraid of sanctions because they're not government officials, but they don't want to be caught in war and are moving their assets elsewhere just to be safe. I think a portion of the money that they moved have actually went back to China, maybe per Xi Jinping's mandate or per their own judgment, who knows? Because in January, both Chinese and Western media suddenly reported record amount of foreign capitals pouring into both mainland China and Hong Kong's financial markets. A record $17.6 billion of funds flowed into Chinese equity in January, a record high since 2020. And how in comparison to 2022, so in January, the $17.6 billion of funds of inflow in 1 month. And the total of 2022, the total amount of foreign capital that went inside China for the whole year was only 7.1 billion. So it's like more than 2.5 times. So 1 month capital inflow is more than 2.5 times of that of the whole year in 2022. And then, yes, in Hong Kong saw a record inflow of capital to its stock market. I think the amount was over $21 billion within the first 25 days of January. And as a result, the Shanghai Composite Index rose 5.4% in January. And guess what? The state media has projected a record foreign direct investment in 2023. So let me show you. Let me show you the take a look at these media reports from CGTN, from Reuters. Everyone talked about the record inflow of market in January. Right? Here's Bloomberg. Here's Reuters again. But they missed one point. I think they missed something. Let me get rid of that. Do I still need those slides? Oh, here's one more. Investor pour money into emerging market at near record rate. All right. I want to point out something that people are not clear. The foreign capital that poured into China, I think, isn't foreign capital that come from Western investors. They are the Chinese capital previously held by the Chinese in overseas financial market with foreign financial firms. They are strictly Chinese capital returning to China. But because they crossed the border, the CCP used it for publicity purpose and called it China's, they're just saying the Chinese market having great appeal to foreign investors. And our media, Western media, echoed that. But they're not. They're mostly Chinese money. Um, so I think that's a point that's often missed by our financial analysts. When we see money pour into Chinese market, we often assume it's Western investments, but they're really Chinese investments coming across from the border. Um, I think this is something that we need to pay close attention to. So, in relative scale, according to the information, the next question is, well, what does this mean to the financial market? So, if if Xi Jinping continued to put a knife on, this is a Chinese, somebody said this, a Chinese analyst told me this today, say, he put a knife on your neck and tell you, bring your money back to China. What will these people do? Of course, they're going to bring their money right back to China. So the question is, what's the impact on our financial market? And what's the scale of it? I looked. So, according to information released by the Ministry of Commerce in September 2021, by the end of 2020, Chinese enterprises, and I think it includes both state-owned and private companies, owns $7.9 trillion worth of overseas assets. Now, the question is, what percentage of that is investments in the financial sectors? That we don't know. So that's $7.9 trillion is the total overseas assets owned by Chinese companies, right? Both state-owned and private. This does not include the $6 to $8 trillion owned by individuals, the super wealthy Chinese that we previously estimated. So the question is, and there might be some overlap because some of the individual wealth may also be held in the form of company, shell companies that they set up. So there might be overlap between the two. But the question is, what percentage of that is in the financial sector? And the second question is, what percentage of that will likely to be moved out of the US? I don't think they will all be moved back to China, but the question is, what percentage will be moved out of the US for the various reasons I gave, right? The three types of people for the various concerns they have. And that's the question. But I think as long as this is happening, it can hurt both China and the US. Because this is really the cost of financial decoupling. As the two economies have become more and more intertwined, and with the way geopolitics is heading, the way Sino-US relations is heading, it's inevitable that the two financial market will become more and more separate. And and as Chinese withdrew large or liquidate large holdings with these financial firms, what's the impact on these financial firms? I do not think the impact is small, but I cannot quantify that. But I put that question in front of those who have the means to quantify it. Now, the other question is, who are the banks, who are the financial institutions that will be affected? I think they know better who they are than I do, because a simple answer would be those who have a very close tie to the CCP, to the high-ranking officials, those who have enjoyed special privileges in China in the past 20 years, or even 30 years, probably will see the end of their good fortune with the Chinese market. And the Chinese money, the exodus of these Chinese money as a result of the CCP factional politics, or will be costly to them. But I don't think it's avoidable because that's the nature of financial decoupling. In terms of who those banks are, I just want to give you a hint. When Credit Suisse was fined for their princeling hiring practices, there was a list of Wall Street banks that were also investigated for the same hiring practice. Right? It's called the Sons and Daughters uh, program. They call it the Sons and Daughters program. So these banks are, I'm just reading from the news report. They are Citigroup, Barclay, Deutsche Bank, HSBC Holdings, Goldman Sachs, and the biggest fine was charged to JP Morgan Chase, which paid $264 million fine for its CCP officials' Sons and Daughters program. So now these companies obviously have a very big incentive to please the CCP officials. So I don't doubt that they have accounts of these individuals' money that Xi Jinping is interested in. So does that mean that they will pretty much see large cash outflows like Blackstone and SVB have seen? We should keep our eyes on them. I know a lot of what I have presented you is speculative analysis. I said that in the beginning. I'm only offering a perspective that I have not seen in the media reports. So it's food for thought. Okay, so that's all. All right. Let me see if people have questions for me. From Digital for Morrison, thank you. Thank you for the donation. From Quail supporting journalism. Thank you so much. Thank you. Well, a lot of discussions. I'm glad that you guys are having a great discussions among yourselves. That's a friend. Somebody, Stephen Gilly said it's friends and family plan. Yes. Who thinks Lei has a nice stash of gold bars? I do not have a stash of gold bars. I wish I do. So, hi Lei from Mr. Nix. Hi Lei, in your objective opinion, is Xi Jinping an effective leader in what he does? Be it good or bad? I feel that a lot he starts, he also see through. Well, he is effective in bringing CCP down. I remember there was some American think tank that published articles that basically they came up with a conclusion that actually we should keep Xi Jinping in place because if you look at what he does, he's really bringing down the CCP from within, right? All these left-turn policies. I mean, if you have the quote unquote reformists, I'm not saying the reformists are bad, but if you keep them in place, I mean, they are going to appear to be more open and more westernized in their policies, but they're not changing the nature of the regime. So the West will continue to be deceived, like what the past 20 or 30 years have been. So what Xi Jinping has done is he just tear that facade, the mask off, and show you what a communist regime really is. So from that perspective, it's good. So he's effective in that regard. So when from Hiroshi Nagoya, thank you, Ms. Lei, for the report. At this point, after the COVID-19, aka CCP virus pandemic, I do not understand why the foreign investors would keep investing in China under the CCP regime. Okay, my whole point is those foreign capitals pouring into China are not foreign investors like you and me. They are the money owned by Chinese outside China, and now they're bringing the money back to China. So because the money crossed the border, because Xi Jinping is forcing them to bring the money back to China, they cross the border. So there appear to be foreign capitals going into China, but they're really the money that the Chinese own, the assets that they own overseas going back to China. I hope I answered that question. All right, let me see. Any other question? Lei is probably sitting on 80 pounds of gold. I wish. I wish. All right. Any other questions? If not, I'll end it here. Let me see. Nothing? All right. When you say trillions, is that dollars or yuan? It's dollars. Everything I said is dollars, except that chart. The chart that I showed you, I for a split second I thought it's yuan, but it, where is it? Here. Oh, here it is. I'm 98% sure this is yuan. But when I was presenting it, like that 2% hit me. I'm like, oh, what if this is yuan and not dollar? But I think there's only 2% of the chance that this is yuan. I think it's dollars. Okay, so this is the only time that it can be yuan. Everything else I said is dollars, US dollars. All right. Thank you. Are you from Silas Larson? Are you worried about a financial crisis? I do. Yes, let's talk about this. I do worry. I do. I think this is inevitable as the two countries pull apart. The financial decoupling is inevitable, and I think the reason why Wall Street has been such a spokesperson, right? They are the spokesperson for China in the US. It's because they understand once decoupling starts, when the Chinese start to pull money from the US, then they will lose all the money they have. They know precisely how much money the Chinese have at their institutions. So they understand. That's why they don't want the decoupling to happen. But unfortunately, it's happening. So when that happens, I think there will be a financial repercussions on both sides. Yeah, I do see that happen. Very interesting insight. I presume the lion's share is not going back, just changing the owners. That's how things go on the scam. Not necessarily, because I think for the private money, like the money that private business people or ordinary Chinese held or Chinese hold in the US, I don't think those money would go back, because those people obviously have a pro-US outlook before they move the money to the US. But I think for those who are involved in politics, and if their establishment is in China, they worry, because once the two countries are at loggerheads, then their money will be stuck, because they could be subject to financial sanctions. And so these people definitely want to move their money out of the US. And also, when they see the financial crisis pending, they also worry that their money here will it will have a higher risk. They're risk averse, right? So they want to move the money elsewhere. So I think the smaller investors probably will keep the money here, and they are also substantial. But the large, the super wealthy, the major, those who have the major accounts, I think those are more subject to scrutiny by the Xi Jinping regime, and the chances he will find those money is higher. So those money probably will go back to China. Are the Chinese going to start moving back? That's a very good question. So let me explain this. It's so the Chinese money, there are like really two buckets, right? If you look at all the Chinese money that the West held or West is holding, there are two buckets. One is the average the ordinary citizens' money, like people who are not involved in politics, just people who are in private business. You have like college professors who have bought like two apartments. Yeah, I mean, yeah, they have bought two apartments in New York, and they have maybe $250,000 cash in the bank account managed by their children who live in the US, or managed by their relatives. And a lot of people like that, right? They have some cash and they have some real estate properties in the US. And these people are not moving these money back to China, and that's one bucket, and it's quite sizable. But the ones that are moving back are the money, and these people are still coming out, and you will continue to see an outflow of private or civilian money or household money coming out of China that try to come to the US, and that has been continuing. But what I'm talking about is the the super wealthy, the money that are held in the Swiss account or in these major, I mean, the money that the CCP officials on their family own, that they have moved out of China probably before the pandemic, before 2019, even before the trade war, or at the start of the trade war in 2018. Those are gigantic amount of money, right? Those are like 22,000 individuals and their families holding 4 trillion US dollars. And it's a small group of people with a lot of money. Those money have been sitting outside China for a number of years. And these are the money that Xi Jinping is after. And these are the money that are, if they're found, if they're discovered by Xi Jinping, they will be forced to go back to China. And I think some of them also want to move the money out of the US. I'm not saying they all want to go back to China, they don't, but they want to move out of the US so that, one, they may get better return on investment. They could move the money to, I don't know, Brazil, right? It's a friendly country. Vietnam, I don't know, Singapore. So they are not going to leave the money in the US with the way things are going, because they know they're connected to the CCP leadership or to the party. And once there's a sanction taking place, then their money will be frozen. So these are the people that are moving the money back. But the mass majority of Chinese citizens who want to move $250,000 or $1 million out of China so that they could send their kids to go to school here or to plan for their retirement or whatever, those people do not want to go back. So hopefully I answered that questions. And I don't think people are very clear about that. They think about Chinese money, they think they're all the same. No, they're not. And it's a very mixed bag, and everyone's agenda and priorities are different. All right, so hopefully I answered your question. All right, so okay, I think I have answered everyone's question. Uh, with that said, I wish everyone a great night or a great day, and I will see you later this week. All righty, bye bye. Okay, thank you. Bye bye.